Much, Emma, and welcome, Martin Bartlam.
Thanks, Lawrence. Nice to speak.
Indeed. Let's get right to the nub of the matter with COVID-19. You're in a global professional services firm. Human talent is at the core of that. You yourself have over 700 employees in your own area, your own remit. And I think there are more than 14,000 on the team at DLA. And we know from all of the discussions we've been having globally with big firms, small firms, the impact that COVID-19 and the coronavirus has had on business due to stoppage, changes in behaviors and people having to work at home, and in some cases for folks leading to isolation. Now, can you walk us through exactly what you've been focused on in DLA when it comes to the people and the talent agenda, and how you have met some of these challenges in the crisis?
Yeah, absolutely. Happy to Lawrence. And it's been a challenging time for us, like it has for everybody else. We're very much a people business. We rely on our people to communicate with each other, with the external clients, to be available. I mean, we're a 24/7 business. We serve the client community around the world on a constant basis. So the actual move towards everybody having to work from home, having to set up the IT, getting computers and systems in place, was obviously a significant challenge for us, like all businesses. I've got to say I'm pleased with the way that it went. It was all done extremely efficiently. I think we benefited from having a fairly flexible working environment to begin with. So we had a lot of people who work on the move, who travel and work off laptops, work off mobile phones. We have a process internally whereby people can work from home. So it was a fairly flexible working environment to begin with, and I think that gave us the ability to move efficiently into a different working environment. I think one of the things that came through, which I think is highlighted throughout this period, is we were also able to learn from what was happening in different jurisdictions around the world. So our offices in Asia were first impacted, and then possibly then later on into Italy and some of the European countries before, say, coming into the UK. And the result was that we were able to see how we moved, making an early move of IT to a home environment, making sure that the secretaries were all set up at home and were able to support the systems, working out how we acquired new monitors and laptops and made sure that the hardware was all available. We were able to learn from what we'd seen in other jurisdictions. So I think that side of things was really important. And I think as we talk today, I think that what I would say we've most learned from this period is how more connected than ever we are, and how we can learn very much from what's happening in other countries around the world.
And I'm curious, I mean, it's great news that as a people-oriented business, you were in a position to get remote working practices up and running, but just with the span of countries and your own global footprint, how difficult was it, given some of the different practices that countries were either proposing or adopting related to COVID-19 and lockdown procedures? I mean, just give us an idea what it was like in a global firm, because most of us, working in at least one country, maybe two or three, and have really noticed the difference. But did that offer a difficult challenge in terms of the seamless policy that you had to put into place as a global employer?
It does. I mean, very much so. And I think you highlight a good point. When we talk about being connected up around the world, what is clear is that the people are connected, but not everybody's experiencing the same things at the same time, and very much different rules and different requirements apply in different jurisdictions. And so as an employer, as a big professional services body, but like any big international business, you have to be flexible enough to be able to implement a policy which has got global effect. So you're actually treating people across the organization equally, but at the same time is sensitive to the local legislation and requirements that are in place. Yeah, and very much through the process, you have to stay in step with keeping one eye on what your main objective is of the global policy, but at the same time understanding that different jurisdictions have got different laws and different rules in place, and you have to abide by those rules. Sometimes it's around the way notifications arise. In other cases, it's about what you can do with staff. It was to do with when the regulations required that people had to work from home, and be able to balance that. Having a global plan with having local flexibility. And I think that this is, again, one of the things that we'll see from organizations going through this crisis. The most successful ones will be the ones that can operate globally, but actually have the flexibility to implement measures as optimal in any single jurisdiction. We're very much in that process now on the reverse of the lockdown. So we've got a project now which is the startup process, which is looking at all the jurisdictions around the world, and obviously for advising our clients as well as understanding the position for ourselves, is being able to access an understanding of, okay, well, when can you go into the office? Is it a requirement? What schemes are there in place to support this? How is it going to work? What notifications do you have to give? And how is it consistent with other protective measures? And being able to present that as a global move towards starting up again in a work environment, but in the context of working with individuals in different locations to suit the particular needs of those locations.
Well, and I recall in the early days, in late January or early February, in the global GDF community, a lot of the larger institutions were moving into lockdown. Smaller startups or some of the growth firms really weren't there or didn't quite get it. And then most of our Asian members were in some sort of lockdown from January, certainly Hong Kong, Singapore, where I think it's fair to say that in the West, quite often we were talking about what was going on with our Asian clients, and people really, they just weren't getting it. And so leap forward, I think this point of connectedness you raise is important, because we're all trying to deal with this information disparity or asymmetry here, both for health reasons and employment reasons. And I know that on a number of community calls I've had, a number of firms have raised issues with people who've been in lockdown that are on their own, that are single or don't have any roommates or family or community around that can help. People who've been in lockdown who have had relatives that had contracted the virus and in some instances, unfortunately, had passed away. And it's not until you really come into contact with those personal stories and speak to people that you realize the effect that this epidemic is really having on many people. Have you been particularly focused at DLA on the mental health issues that have been related to the coronavirus crisis, and what are some of the policies that you've put in place to help deal with that?
Very much so. You highlight a really important element of this crisis. Like any big organization, you're absolutely right. We've members of the firm that have been impacted, either they've caught the coronavirus itself, or I know colleagues that have had parents that have been in hospital and even died as a result of the coronavirus. So certainly the personal impact, I think, is something that we have to be constantly aware of. And then there are, I would say, other elements that were maybe a surprise. I would think a lot of people, a lot of organizations like ourselves in London, we have people from all over the world that work in our offices in London. And so when people were going, yeah, well, what has happened is, there's many of our staff that are, particularly younger staff, as you say, that maybe would have been living on their own in a flat in London, that have gone off to their parents or family in different places around the world. So we've had to also get used to the fact that there are members of the team that may not be actually based in the UK currently. They're in different locations around the world, and we have to adapt to making sure they get information, and they're sharing calls, and they're able to work effectively from whatever location they are in. The emphasis around this sense of community, that we probably lose sight of the community that we have as working in a work environment and the normal day-to-day run of things. But having people working alone from home for a long period of time actually does impact that sense of community and the sense of shared purpose that people have from working day to day in an office environment. So we've been very much focused on making sure that there is ongoing communication, not just from a work perspective, but ideally there'll be some soft group events. My local group in London, we had a terrific event one evening last week where we just wanted to promote, we wanted to celebrate the promotion of a number of the team. And so we just had a kind of games night on Zoom where everybody could join in, and it's terrific. But that sense of isolation and loneliness and loss of purpose, I think, is something that all organizations are going to have to be very focused on. And you ask, what are we doing as a firm to test and manage this? So there's been a number of, we have regular surveys that have been going on through the firm. So the number of surveys that have gone is trying to assess how people are feeling. We have various well-being and state of mind presentations that are available to staff, again, just to try and provide some help, some assistance, some thoughts around what people can do. But most of all, it's about maintaining the sense of maintaining communication and using that communication to promote a sense of common purpose. Whatever that purpose might be, whether it's the service of clients, whether it's the continuation of learning, whether it's the move towards what do we do as the next phase in coming back into the office, but basically ensuring that people, wherever they may be geographically and whatever they are in their lives, senior or junior or whatever role they play, they feel part of the larger organization. And so they want to come back into that community. They want to be part of that community, whether it's physical or not.
Well, I love the well-being toolkit of the well-being survey. I hope that at minimum those sort of indicators come out of, are born out of this crisis, not just with companies, but at a national level, that we're starting to really take the health of people and our communities much better. And so I do feel a bit fortunate in my own role at GDF, which you know as one of the founding patron sponsors, is really a global network that is very good at remote and distance working. That's how we actually get codes of conduct, standards, plenary sessions done. But again, on a reasonable frequency of coming together in person or in video. And my own businesses are very similar as well. And I've been doing that for more than 10 years now in the so-called gig economy. And I've got quite a bit of empathy for people who have never had to do that, because it does take a discipline. I mean, I know when I first started, working from home, it does take time to understand really how to get the job done, how to down tools, all of those sort of behavioral things. But certainly as a fan and an advocate of those ways of working, do you think now that with the decreased number of face-to-face meetings and the growth of remote working and platforms like this Zoom, again, the absence of global conferences, which are very big in both of our communities, but we've moved to a virtual conference format. Do you think that some of these tools will have some permanence and stay once we're out of the crisis, and we think that certainly things might not be back to normal, but the crisis doesn't present the threats that it's been presenting to date. Will some of these behaviors and processes stick, or do you think we'll just revert back to normal and all go back into the office and start traveling and going to conferences again?
I think very much as you're pointing out. I think we will have learned things, we will have experienced things through this crisis. Some of which we will have learned from, that they provide a better way of working than some of the things we were doing previously. And I think it's important that we assess the learning that's happened during this period when people do go back into buildings and a more, let's say, a traditional working environment. An example, I have found that I am more in touch with my international colleagues now as a result of working through these Zoom meetings than I ever was. And I've been a lawyer for many years, and I've never had the regular contact and closeness that I have now with my partners around the world. We have a series of regular meetings where I'll be having a discussion like this with my colleagues, ranging from Australia to Hong Kong to New York to Paris and so on. So it's created a new mechanism, and those meetings, I believe, will continue, and I think they're incredibly valuable. And traditionally, no matter how hard we worked at maintaining these international connections, we were always closer to the people who were geographically closer to us. So you just naturally had more meetings, more conversations with the people that were close by. And I think that will change more. I think we'll see more flexibility in the working arrangement in terms of days in the office or hours that people work, but also the way the teams are formed, that they won't necessarily be based around who is closest to your desk. They will be based around what is the right team for the particular job on whatever international basis it is that you're looking at. I know that one of the initiatives that I tried to move towards was people, because we've had video access for years, but people were very reluctant to put their videos on, which has changed in this period. People have understood the importance of being able to see a group of people and be able to understand a little bit around the body language and the way people react to discussions. And I hope that the default setting is, after we go back, is that people still put the video on, and that when we have these conversations, that the people are still looking at each other, looking at each other eye to eye, and still conversing the way we're conversing today. And I think it will change the way that we work. I think it will make us better for it. I think we'll be stronger, and I think we will be more able to manage this increasingly global environment that we're working in.
Well, I love the point that you make about the regular contact again and the immediacy of that. I think that you're absolutely right. For many people who have never had to work this way, they've actually discovered that it actually is a productive way of working, and certainly has a number of efficiencies. And then in straw polls around the GDF community, speaking to managers, a lot of people have said, to your point about the communication you're having with global partners now, we actually communicate more effectively in that, one, we get together, but the quality of the dialogue has really focused now. And I guess, again, a lot of that has to do with the immediacy, the nature of the situation. So I do have to say, you're probably one of the few people who travels globally more than I do. And I was always conscious of my own carbon footprint, because without my travel, the family carbon footprint is excellent. When I start to add in my travel to London and New York, it starts to get ridiculous. And I joke that most of my friends have their own private planes and laugh at me because I fly discount airlines. So even with a reduced carbon footprint, but it's certainly given me an indication that I don't probably have to be in London or New York as often as I have been. But I really do see in our community from the amount of sharing we started doing, even from our Global Hub callouts, which you were part of in March, and looking at how COVID-19 was affecting each of the hubs, particularly in the crypto digital community, to now. The community really does get thumbs up. It's coped extremely well with things, but I know that people are missing that human social contact. So let's hope that some of this sticks in our ways of working. Let's change gears now. You're a credit specialist. You and I have been in a number of discussions on a number of forums in the last 2 or 3 months talking about what's going on. We've broadly got, I think the reliable estimate is about 9 trillion in either direct debt or funding to the community on. Half of that is, and the other half is in grant or stimulus packages. So this massive amount of liquidity that's gone into many of the jurisdictions, again with probably more of a G20 bias or focus. We've had smaller or medium-sized businesses really struggling with things, and particularly those in the leisure, the entertainment area, and anything that is focused on travel, leisure, entertainment, which appears to be hit worse from things. But can you give us a view of now we're in June, many countries are coming out of lockdown and are starting to get things back up and running again. Everybody's worked out that you can't start it up as quickly as we sort of shut everything down. But can we get a view from you as a sort of credit specialist on where the shorter term challenges are going to be over the next 6 to 12 months and in coming out of this lockdown, and really what we should maybe be keeping an eye on as managers?
Yeah, absolutely. So there are a few themes that come out of I think what's happened to businesses over this period of time. I was interested to see. I think you're seeing that the markets are up, and some of the markets are up in record territory now, which seems incredible. Or you would have thought it was incredible if you were looking at this 8 weeks ago. So this crisis has been a crisis that you would have expected to result in a lot of collapsed businesses, but it essentially is trying to differentiate between credit and liquidity. I mean, the global financial crisis was a liquidity crisis. Suddenly liquidity dried up. I think governments have learned from that, and I think this crisis could have resulted in a huge crash if liquidity had evaporated in the same way as it did in the global financial crisis. As it is, governments have tried everything they can to maintain liquidity. They have pumped money into the economies through a whole host of different measures. Whether it's in the UK, whether it's employment support schemes, whether it's through corporate lending schemes or subsidy schemes. So all of these are methodologies of trying to keep the liquidity going. Now, there will be businesses undoubtedly that are going to be impacted. And I think we've already seen a number of businesses which were probably already struggling before we went into the crisis. And in a way, in normal times, these businesses would have gone into restructuring or insolvency as a result, typically of changes in interest rates and credit policies. So interest rates going up, we usually put pressure on businesses that are not performing. But because we've had such a long period of low interest rates and forced liquidity by central banks and governments as a matter of policy, it's been a very benign environment, but still some businesses have been struggling just from a business perspective. And we've already seen some casualties in that space. Yes, obviously, retail has been a particular difficult area, partly because those that didn't react to the changing environment towards digital. Some you can argue around some other policies, rates, and others that have impacted high street and retail businesses. But the sense is that if the if we could get back to work, if the economy could get working quickly, this short period of time, with a lot of liquidity pumped into the system, would probably mean that we wouldn't have the same damage to the underlying economy and the underlying businesses as we might have expected. We will still have a number of those businesses that are going to go into restructuring or insolvency because they were struggling as it was, and then we may have some structural problems. So the airlines are a classic example, because airlines, on the best of times, run on a very on thin margins, and if they don't manage those margins effectively, they will be technically and actually insolvent. So they obviously face some particular pressures. Similarly, the hospitality industry, again, the margins are not necessarily that great in the hospitality industry, and I think we're all watching to see what actually happens in that sector going forward. But to come back to the bigger theme, I think that the pumping in of liquidity by governments around the world has probably created a lifeline that's managed to keep businesses certainly afloat for this period. The question will be, how long can that continue, and how quickly can businesses get back into some kind of profitable performance? Sorry, Lynch, to unmute. Lawrence, I can't hear you on that. Yeah, I think you got your.
That's all right. So I'm having technical problems here. We're having work done around here, so I'm trying to mute. How often we've been doing Zoom calls consistently for 3 months now, and I still can't find the unmute button. How is that? But with your global hat on, again, Martin, have you seen particular practices or things come out of countries, whether it's on either the stimulus side of things or in the way that folks have responded to the crisis that you've made a note of?
I think that most governments have followed a fairly similar approach in terms of stimulus. I think most governments have understood that it's important to provide support packages for their businesses. There's obviously been there's been a range of actions in terms of how strict the lockdowns have been, from very severe to countries that have not implemented a lockdown at all. And I think probably the jury is still out. The evidence is still out there, and I don't think none of us really understand yet, what was the actual best approach from when you actually add everything up together. So there's been the general response of providing stimulus, I think, has been a consistent approach across countries. Employees have obviously been largely protected, rightly so. I think that the policies have been to try and minimize the structural redundancies that could have occurred, and so that a lot of measures have been put in place to protect that. In the consumer law area, payment holidays have been a common theme. So we did a webinar 2-3 weeks ago on payment holidays and the impact of payment holidays on the finance market, particularly all the structures which depend on regular flow of receivables payments. And so almost all, most governments have implemented some kind of forbearance procedure and probably 3-month payment holiday process. So it looks as though most governments around the world have adopted a kind of 3-month window whereby they've looked at the position and said, okay, we're going to try and just minimize the impact of non-payments or reduced payments over this next 3-month period. And I think we're looking to see how governments will then react in the following. Some will say, well, we'll now do another 3 months. Some will reduce that 3-month period. And we'll see how quickly economies come out of the lockdown, the slowdown that has occurred. So it looks like the parameters are about roughly a 6-month period across countries, and within that 6-month period there is government support almost anywhere that you look. And the question will be, okay, businesses have got this 6-month window in order to manage their liquidity, manage their their revenue base, manage their cost base, and then it's likely that they will come out, and those that survive will then carry on working as normal, and those that don't make it will then go through some sort of procedure. It's the perception I get of the way the world has approached this.
Well, I think that that's a very handy takeaway for managers to pick up. We lock into 6-month cycles here, and we, in essence, some of the things that were learned out of the financial crisis, which, as you point out, was a liquidity crisis for many reasons, particularly after the fall of Lehman's. And now we're looking at a global health crisis that's broadly creating a financial crisis. But the big learn was, I loved Tim Geithner described Ben Bernanke's whole approach, and Tim Geithner was doing at the Treasury at the time, which was when the patient, is critically ill, you need to give it support, which was liquidity at the time, and now we've seen that deployed again. So we want to keep, I guess we want to keep an eye on the next 6 months and the clip rate, or how quickly countries come out of recovery, particularly in the context of what COVID-19 or the coronavirus does next. And from a professional services perspective, from the perspective of a law firm, are there any sort of profound changes in the offering that you think will affect some of the ways that you look at the services that you're going to be offering over the next 6 months, the next year, into the future?
Well, and this probably takes us right back into the heart of what you're doing, Lawrence. I mean, the digital agenda, I think, is probably the thing that will be most significant coming out of this process. I think what we have seen and what we have learned is that the businesses that could adapt, or were already adapting, or could adapt into this new digital environment. Whether it's Amazon delivering goods, or whether it's one of the stores delivering food stuff. The new online world is with us, and it's going to reshape the way that I think business operates. I think we've seen it very clearly in the context of retail and services at that level. I think we're seeing it increasingly now in terms of what's happening in financial and other services. And law firms are not in any way immune from this. We have had to look at how digital processes operate. We're increasingly under pressure to bring digital measures to be more electronic, more cost effective in what we do. I mean, just an example of one of the areas that's really mushroomed in importance is digital execution. So, of course, everybody disappeared into their home worlds very quickly, as you said. The businesses were shut down pretty quickly, and everybody, almost within the space of a week in the UK, suddenly were back to working in their homes or some other environment. And yet there were lots of deals that were still on the table. And yet everybody very quickly had to then learn, how do you do electronic signatures? How do you do an electronic closing? What do you do if you haven't got witnesses to hand? How do we change the way we operate so that we can all remotely meet and execute a contract, a documentation, a set of documentation? So digital services in all its workings, I think, is going to accelerate out of this crisis. And what we'll see is both the businesses that are probably strongest coming out will be ones that have got a technology-driven or digital-based footprint. And the way the services are operated going forward will increasingly be looking at how you do this online, remotely, through different media and mechanisms, how you generate efficiencies, and how you can reach people around the world, but at in real time, low cost, and do effective closings and effective contract negotiations. So it's going to impact all of us, and certainly the traditional law firm is going to have to adapt with it.
Well, it's interesting that you pick up digital signatures and closings, closely related to identity. I think the narrative in the community is, how do we build a better resilience into our businesses, communities, different ecosystems that we all participate in. And that is correlated or co-joined to digital, which is all about how do we identify people better, get money to people quicker, validate that it is the right people, the right money, those sort of things. But are there other areas of the broadly this sort of digital platforming space that you're seeing and that you're preparing for as a firm to be important in the resilience discussion over the short or medium term?
In terms of what's happening from a client perspective, I would certainly say the payments world is changing significantly. The move from traditional cash and means of payment towards e-money and payment services in electronic and digital form is becoming an increasingly important space. It's not that long ago when I think we thought it'd take a long time to move away from cash. We looked at what was happening in China, and we thought, China's going almost all digital and moving away from cash at an incredible rate. But we can't see that happening in, say, some of the Western European countries. And this has probably accelerated that process. I mean, I have more clients now coming that are looking at e-money and digital and the payment space. When I look at what their technologies offer, it's far more efficient and far better from a user perspective. It's more what a user would want and would expect to get from a services provider than the traditional banking arrangement with checkbooks and the like, or even the way accounts are managed and reported. So there are big changes there. I mean, I think at a global level, I think you may be touching on China. I mean, the advances in technology in China are really interesting. I think here in this part of the world, we probably are a little bit of the view that the innovation and change will be driven by places like London and the UK and the US, where in actual fact a lot of change and a lot of technology innovation is coming out of, say, the Asian base, and they're moving quite quickly. And I think there's a danger that we will get sidetracked by other issues, whether it's Brexit or other problems that we might be dealing with, and actually we will lose the momentum to innovate effectively. I think we've seen strains in the US, and I've always been a massive supporter and fan of the US. I've seen it as a place where there's huge opportunity and innovation, and yet its agenda seems to have got very confused. It's probably losing its standing as the lead player in innovation and development. So yes, all of this coming out of this period, I think we will see changes in a whole host of different ways that impact the businesses, the geographies, the way people interrelate, what survives, what doesn't survive.
Well, Chris Giancarlo and the Digital Dollar Project in the US would certainly support you on that. His whole narrative is, gee guys, wake up. We need industry and government to work together on digital dollar or a US CBDC. China's way ahead of us, and not just in terms of retail consumption, but in terms of trade and all sorts of other factors. And so I think that's a great way of looking at the payments, the payments and the digital ecosystem that we're seeing and moving from broadly e-payments into digital currencies. And we all talk about how Libra really got central banks to focus on CBDCs, and Libra looks as if it's got a stable coin that
lost the signal, Lawrence. Emma, have we lost Lawrence?
Yeah, it looks like we've just lost Lawrence. I think he's trying to rejoin. So let me just give him 1 minute, but we may move to questions if that makes sense while Lawrence is rejoining. So Martin, I do have a few questions in already. While Lawrence isn't here, if you don't mind, I will just jump in and ask.
Sure.
We have a question here. A common way for lawyers to do a KYC of an individual is to ask them to email a scanned copy of their passport in times of corona where remote identification of the individual. How do you handle that in the UK? How is DLA Piper handling that at the moment?
Thanks, Emma. My internet connection for the first time in all of these leader series has just dropped today, so we've obviously got gremlins in the house. Oh.
Good to have you back.
No worries. We were just asking about, I mean, some of the challenges around the KYC and the like. So, I mean, Emma, sir, I think in response to that question, I mean, obviously the approach to dealing with the evidentiary side of KYC has been changing, over these last few years significantly. I mean, there are lots of organizations, to the point you make about, okay, one of the ways of identifying, traditionally one of the ways of identifying an individual has been around a copy of the passport and maybe their address and some evidence around the linkage between that person and the address, etc. But that's all been moving, I think, in any event over the last few years. There's lots of businesses, global businesses now, particularly some of the technology businesses that will do scans and I mean, a whole host of different ways of doing a video of yourself holding a passport to providing some witness statement about the identity. I think from a DLA perspective, or like any regulated organization, we have to comply with the regulatory requirements that we're subject to. So it's a matter of feeling that we're satisfied with whatever means of identification that have been provided to us. And so there's no strict, we don't have to get a written, an original copy of the passport. It can be, as long as we're satisfied that the information that's been provided, then that's a reasonable base for reaching the conclusion that the KYC has been provided. I think it takes us. I do think that one day we will go to a more structured digital identity type world. I think it's inevitable that there will be ways of both safeguarding the private information of the individual, but being able to store that in a system which it becomes a database which can be used by organizations to confirm or verify identity. And obviously there are a number of projects that are going on in that space at the moment. And that's really the only, that's really when we'll only be able to get to a much stronger form of verification of identity, I think, once we have those checks in place.
Yeah, and that's a pretty big area with a lot of initiatives going on. So we'll keep our fingers crossed on that. I just wanted to get back quickly, Martin, to the crypto digital asset space. And I think, in one side we've seen, crypto assets not just weather COVID-19, but do extremely well. The derivatives market for crypto is growing. The idea of retail stablecoins now is certainly cottoned on and gaining momentum. And again, we've got central bank digital currencies, starting to become a prospect. But if we looked on the security or other asset token side of things, and there seems to be a game of sort of two halves. One is, is there a replacement for utility tokens or some sort of new, type of asset class emerging? Versus, is this just the ongoing evolution of the digital infrastructure as it relates to securities or assets? Can you give a view on where you think that's going and what we should be keeping an eye on?
Yeah, sure. I've looked at jurisdictions all over the world in terms of their approach to the regulatory issues. I mean, inevitably, anybody who's looking at a security token or a utility token offering, the reason they come to the conclusion that that's the approach they would like to take is usually because they're looking at a multi-jurisdictional approach to whatever it is that they're doing. And so inevitably, we've looked at jurisdictions all around the world. Having said that, I do think that the position that the FCA in the UK have taken is a really good one, and I think as a model, it works really well in my view. And I can explain very simply that what the view is that they accept that there is such a thing as a utility token. They don't have any problem with the existence of a utility token. And I think in certain circumstances, a utility token is an ideal innovative tool for doing something that we couldn't have done before. And on a distributed ledger technology platform, it can be a fantastically powerful tool. And I welcome that, because I think it genuinely is, in certain circumstances, a great tool. But the vast majority of what were described as utility tokens in the ICO phase were actually just fundraising exercises. And so again, the UK position has been, okay, you can have a utility token, but it has to actually be a utility token, and there's some tests that you can apply to that. If actually you're doing something which is really akin to fundraising, or is really just like any of the other financial instruments that are regulated from a UK perspective, and there's a vast number of those. It's not just equity securities. There's a big range. But if all you're doing is really creating something in digital format, then it should be regulated the way those financial instruments are regulated. And so for people like me and for my team, it's really the first step is always about defining and identifying what the nature of the underlying digital asset is. And so being able to characterize that by virtue of what it's constructed to do and how it works, and then applying the relevant set of securities rules, or that it's not a security and it falls into the utility space or e-money space, depending upon what it actually is. But it's not as complicated as many people make out. The difficulty often comes from the fact that people are looking at trying to do a securities type offering, but not go through the securities requirements. But I do think it's a model that will eventually spread throughout the world. I think that the latest set of rules that have come in through the Fifth Money Laundering Directive in Europe have complicated things a little bit, because essentially that requires that anybody who is providing an exchange service or a custody service has to be registered with the regulator. It's not an authorization as such, not a permission, but it's a requirement for registration, and it requires certain steps are put in place to manage the KYC and AML issues. And at its widest interpretation, if you haven't got a third party which is providing the mechanics of the exchange process into a virtual asset, then probably the issuer is probably caught, because somebody must be providing the mechanics for doing the conversion. So, and that's probably created a little bit of complexity in Europe, but again, it's something that can be easily understood and explained, and again, if people are willing to comply, it's not particularly onerous. So did I answer your question, Lawrence?
Yeah, well, indeed, and what we would say about the AML directive, at least it's front-running the FATF 16 requirements, know, for VASPs, so it's a bit ahead on that front. But I think that's hugely helpful, Martin. I think for our listeners, Martin Bartlam, DLA team, and a group of the GDF community were at the OECD in what I thought was probably the most difficult advocacy engagement we ever had in, I think it was May of 2019, broadly defending and putting forward the utility token to what was certainly a group of regulators and global policymakers that weren't particularly keen, but noting that ESMA and the Europeans really put recognition in that. I just like if it looks like a duck, it walks like a duck. If it's a security, there are probably laws for it, and there are tons of projects going on to make the infrastructure for securities or other assets better with blockchain, but don't confuse that with a separate asset class. So I think that's great advice. Just one quick one as well before we clock off, Martin. You're a founding patron member of Global Digital Finance. You're also the GDF General Counsel. We spend a lot of times doing codes of conduct in GDF with the global community at the global community's request. And we started doing this because the global community felt it was important to have codes of conduct mainly in an unregulated or a sort of fragmented policy area, for firms to be able to, demonstrate that they could adhere to high levels of standards for customers, for shareholders, stakeholders, and particularly for regulators. How important do you think these sort of codes are in the current ecosystem, where we've got this, regulation patchwork around the world and this asymmetry? How important is it for firms to look at codes like this?
My view, and part of the reason why I've been so involved, with the group, Lawrence, is that it's essential. It's the actual what we've actually seen through GDF and other working bodies, but I think GDF is a particularly good example, is the industry come together, and the industry actually, some of the people who are best placed to understand what it is that they're trying to achieve. And they're not trying to achieve some underhand aim to get around regulations or to avoid perfectly reasonable measures that governments and regulators have put in place. Usually they have an objective, which is to actually bring technology to fruition in a commercial way in a global environment, which would, for the most part, be beneficial to society as a whole. I mean, you would reduce costs, increase efficiencies, improve transparency, improve reporting. So the underlying objectives are generally good, I would have said. But the difficulty has been, as you highlighted, in a fragmented global legal system where every country has a set of rules, which is as much to do with their history and the origin of the way their code has worked as much as anything else. To actually create uniformity in approach is extremely difficult. And what we had was a very clouded lack of understanding, with some people putting codes in place, some people not putting codes in place, some people not understanding what was happening, some people going way too far and regulating things that really had never been regulated in history and shouldn't be regulated. So what was necessary was to have some common voice, some common basis for analyzing the problems, and then trying to produce and provide some fixes that would provide a consistency across legal systems. And I think that's why something like GDF is so important, because it's not designed specifically to reflect a particular legal system. It's designed to say, well, what would we as an industry want to be the way this business operates and regulated in a way that's sustainable and sensible from the point of view of the organizations themselves and the customers that they serve, and consistent in that respect with what the regulatory standards are. And so I think in a way it's been a very helpful tool for regulators, because we know that it's been a very positive relationship with regulators. We've had very good conversations with regulators, and there's actually a common desire to create a sustainable set of standards which work in alignment with the existing framework and don't subject anyone to particular concerns or abuses. So I think the more we can do in that space to work consistently with the industry, but also aligned with what the regulators are expecting and require from businesses, then we're taking a lot of pain out of the process. Because as a lawyer, the one thing I know, and it doesn't give me any pleasure at all, but so many businesses come and ask me if we can do a fundraising in 50 jurisdictions or 20 jurisdictions around the world. I say, yes, of course we can, but each one of those has a different set of rules, and they're all slightly different. And depending on exactly what it is that you want to do, and you're going to have to do it this way, or we're going to have to get advice on that particular point, it's very difficult. So if we can present at least a common process, and then we can discuss that with regulators around the world to try and adapt that to at least a common approach, which is going to work across the main jurisdictions that where securities are typically issued, then we're going to be in a much better position for the industry than we were certainly last year or the year before.
Well, thank you for that. And it's a timely reminder for me. We get quite a bit of input from the community saying we need to talk more about what it is that GDF does and get our codes out. So that's a good aid memoir for me and a final note to end this. One quick question I'd like to answer. Someone sent in. I've got a UN SDG pin in, and yes, the SDGs are a very valuable framework for fintech, financial services, and my main principal business, which is investment management. So, but it is a framework, you know, rather than a definitive measurement system. And we're all looking at how to best adapt the UN SDGs. So I hope that answers your question. We've got our next Global Leaders Town Hall on the 14th of June, and we're going to be joined by President Tuomas Hendrik Ilves, who's the former president of Estonia. So that's next week, I believe at this time, at 1400 British Standard Time. So it goes for me to thank you very much, Martin Bartlam, Global Head of Finance and FinTech Co-Chair at DLA Piper, and clearly a dedicated GDF patron member. We're certainly grateful for your support. Thank you, Emma, and thanks to everyone for listening today. Bye-bye.
Thank you.